Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Friday, May 21st, 2010. Earlier this morning, actually both houses of the legislature in Germany have passed the Euro bailout package. So earlier today it had just been the lower house, now it's the upper house, so this thing looks like it's a done deal. All right, but what we're talking about is possible intervention. And basically intervention is that when central banks come in and they have a desired level that they want their currency to be, and they'll take appropriate market actions to try and maintain that level. Now, currently the Swiss National Bank does that. I just want to show you here real quick. We can look at Euro Swissy. Now, we don't talk about the Swissy too much, but as you can see here, right here, there was a lot of intervention going on until we had the start of the crisis, which got to be too much for them to hold, but they came back in and they started to hold it right here at 140, and as you can see, it's bounced off of those levels and gone up. So the euro's been higher against the Swiss franc. They were trying to keep the Swiss franc from being too strong. So now there's some talk that we may see some euro intervention. And there's also some talk out of Australia that we may see some Australian intervention. Okay, if you look at what's happened to the Aussie, okay, with 1, 2, 3, 4, 5 down days here, and it's sold off quite a bit. So there's some talk in the markets about intervention, and whenever that talk starts, people get nervous, especially going into the weekend, because you don't want to get yourself caught short. If intervention happens, you're on the wrong side of the trade. Boom, automatic loser. I've seen many traders wiped out because of it. So that's something to be aware of. So what we're seeing today is we're seeing a lot of short covering. All right, it started yesterday afternoon a little bit, and it's kind of continued into morning. So if you looked at just regular charts, you might say to yourself, "Hey, this is really just a risk-taking sort of day." But in fact, it's not so much people taking risk, although I'm sure there are speculators who are getting in on the long side of some of these commodity currencies, maybe anticipating some sort of intervention, or who knows. But right now, this is more short covering. So that's what's happening today. We've obviously had a very volatile week. There's a ton of fear in the market, and there was some fear that Germany might not pass this legislation. So they went ahead, they did, which was good, and it looks like maybe the markets are starting to stabilize a little bit. So I just want to tell you some other things real quick. The loonie is doing better as well. It's just let's see, it's just up a little bit against the dollar. Now, they just came out with their CPI figures, which came in a little bit hotter than expected. All right, but they're also getting hit today a little bit by oil prices, which are sort of keeping it down. But if you're sort of a technical guy, we see a little doji here right near the top. This could be a good place to decide to get long the loonie again. That's for folks that like to look at technicals. That could be a spot. Of course, you want to keep your stops tight in a situation like this because the trend has been clearly up, so be aware of that. Eurozone, we know what's happening there. German GDP figures came in as expected, showing a gain of 0.2% for the first quarter. The previous quarter was flat, so that's a positive sign. What else is happening? Let's talk about the yen. The yen is actually, let's look here. Let's look at dollar yen real quick. All right, dollar's still weakening against the yen, and as you can see here, the yen is weaker against the Aussie and the Kiwi and the loonie, okay, in basically this short covering. But what we see here is dollar is still weak against the yen, and basically what that's showing is that we have dollar weakness. Now, why do we have dollar weakness? Well, we have general market weakness here in the U.S. this morning. Stock futures open lower, stock markets are down. Basically a two-pronged effect here. What's happening is first the financial regulation that's passed Congress yesterday or last night, whenever it happened. All right, there's a lot of uncertainty about what that's going to mean for different companies, financial companies, banks, etc. And then also, a lot of U.S. companies have exposure to Europe. Okay, and if Europe goes into these austerity measures where they cut back, they hold in the reins, that's going to be worse for our exports and our markets. So, that's sort of on the table as well. So we're kind of seeing a little bit of a crazy day. Today also happens to be options expiration day, which can sometimes get nutty as well. So the markets are kind of moving around a bit, but take your cues cues from the markets. If you have profits right now, take them off the table, because you never know what's going to happen over the weekend. If something does happen, of course you can't do anything about it, so you're sort of stuck to wait towards Monday. And then you know what? Next week there's going to be plenty of opportunity to reinitiate new trades. So that's what we've got for now. Everybody have a good weekend and good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.